Now, the government's tax revenue kitty has grown by 25% in the April to July period as compared to the same period last year. All categories, including corporate tax, personal income tax and, of course, GST collections have seen buoyancy. Timsy Jaipuria is here with the numbers. Timsy, sharp rise in collections across the board, and that bodes well for the government.
Well, when you see the robust tax collections, they have been giving confidence to the government that the economy is slowly coming back on track. Rather, the view presented by IMF that India could be the fastest growing economy this year and next year gets seconded by the buoyant tax collections. Here's a look at our tax revenue kitty, how it looks like. If we look at the jump in tax revenues, we see that during the period of April till July this year, we've seen a growth of 25%, which has been built by both healthy direct and indirect tax collections. Coming first under direct taxes, corporate tax data during April till July this fiscal has shown a growth of 35%. On the other hand, the window of personal income tax has also seen a healthy growth of about 50% during April to July this fiscal. Indirect tax collections have also grown, reflecting that consumption is back in the economy. Though critics say that inflation too could be a reason for the extraordinary indirect tax collection growth, but GST collections are reflecting a healthy trend, and that's what the government is seeing. Remaining again above the 1.40 lakh crore mark of when we see the breakup of the monthly tax collections of GST, they give confidence to the government and the economists. So if we see the monthly figures, GST collections grew by 20% in April, followed by 44% in May, 56% in June, 28% in July, and 28% again in August. Important will be to see how the government is able to sustain these growth levels in the remaining part of the fiscal.
All right, Timsy, many thanks for joining us. And that is perhaps why the Finance Secretary T.V. Somanathan believes that we don't need to temper the borrowing calendar at this point in time. We don't need to intervene at this point in time, even though growth has been below expectations.